You are watching Econoom TV, the unofficial broadcaster of economics for South African students. In this episode, it's Chapter 4 and measuring the performance of the economy. This is part 3 of 4, and we are looking at the national accounts. In this part of the chapter, we are taking the concepts that we have learned thus far, for example, the gross domestic product or gross domestic expenditure, and putting it all together in the national accounts. The national accounts are used to calculate the national income and is one of the key elements used to measure the performance of the economy. The format is as follows. You start the calculations with the final consumption spending by households, that's C, plus gross capital formation or investment, which is split into two parts, fixed capital formation and changes in stocks. Then you add the final spending by government, and this gives gross domestic expenditure. Adding on the exports of goods and services and subtracting the imports of goods and services gives the gross domestic product at market prices. Up to this part, you're familiar with it. C plus I plus G plus X minus Z gives the GDP. Then if you go and subtract depreciation, it gives you the net domestic product at market prices. Now you need to take account of factor payments. So you subtract the factor payments made to factors that are abroad, and you add on the factor receipts that South African factors of production earned abroad. This gives you the net national product at market prices. Finally, you can plus the subsidies paid by the government minus the indirect taxes paid by the consumers, and this gives the net national product at factor cost. At factor cost means that you're now looking at the value of national product at the payments made to the factors of production. In other words, incomes, and this gives the national income. There are two key differences that you need to take into account. The difference between market prices and factor costs, and the differences between gross and net values. Please take note that there is also a good summary of the national accounts available in the study guide. So let's have a look at those differences. You move from gross domestic product at market prices to net domestic product by subtracting depreciation. You move from market prices to factor costs by adding the subsidies and subtracting the indirect taxes. Like I said, this is the difference between the value of national product at the prices paid by the consumers and the value in terms of the receipts of the factors of production, in other words, their incomes. We can typically give you an example with lots of different values and ask you to calculate the value of national income. So in this case, you have the private consumption spending, government spending, imports and exports, incomes received by South African students working in London, investment spending, depreciation, the incomes paid to Cuban doctors working in South Africa, indirect taxes and subsidies, and you have to go ahead and calculate the national income. It's not difficult mathematics, but you need to know the order of the calculations by heart, starting with private consumption spending, adding investment, adding government spending, and this gives you gross domestic expenditure. Adding the exports and minus the imports gives the GDP at market prices. Subtracting depreciation gives you the net domestic product. Then you add the incomes received by the factors working abroad. That's the South African students working in London. Their money gets added on. Then you subtract the factor payments made to foreign factors of production, in this case the Cuban doctors working in South Africa. This gives the net national product. Moving from product to factor cost, you need to add the subsidies and minus the indirect taxes. So this gives you the net national product at market cost, also known as the national income. So did we achieve the outcomes of this section? Can you compile the national accounts and do the calculations from numbers that we give you? Also have a look at Chapter 4 in Moor and Fourie. There are additional resources available on Yefundi, and you can answer the quiz questions. Finally, follow @Econoom on Twitter.